What if I told you there's a dividend stock that's been paying investors for over 50 years and just raised its dividend again? Today, we're breaking down one of the most reliable income machines in the entire REIT sector, NNN REIT. Is it still a buy, or is the best already behind us? Let's find out. Incorporated in 1984, NNN is a real estate investment trust that owns over 3,000 freestanding retail properties across the United States. The company focuses on net leases, where tenants are responsible for property expenses like taxes, insurance, and maintenance, providing stable rental income for NNN. Its properties are leased to a diverse group of tenants in industries such as convenience stores, restaurants, and automotive services, with long-term leases that reduce turnover risk. The company is currently available with a 5.97% starting dividend yield, while the 5-year average was 5.13%. The price-to-FFO ratio is now 11.5, compared to the 5-year average of 13.4, and the sector average is around 14.8 at the moment. The company is already available for $40, while the expected price is estimated to be between $42 and $51. Based on these metrics, the company appears to be slightly undervalued. The company currently pays out $2.40 in dividends per year, distributed quarterly. The next dividend payment will be on February 17th, and anyone who holds shares by January 30th at the latest will be eligible to receive it. The most recent dividend increase was 3.4%. Over the past 5 years, they have raised the dividend by an average of 2.4%, and over the past 10 years by an average of 3.3%. This isn't the highest growth rate, but given the already high starting dividend yield, it is acceptable. Over the past 12 months, the FFO payout ratio was 69%, and the expectation for the next 12 months is the same. This is well below the commonly accepted 90% threshold, and it has consistently stayed below that level for the past 15 years. The adjusted FFO per share is not growing very quickly, but it is steadily increasing year after year. The same is true for free cash flow per share. This is clearly reflected in the FFO per share growth chart, with the only notable exception being during COVID, which is not surprising. The same pattern appears on the sales growth chart as well. As is typical for REITs, the company issues new shares every year to fund developments and dividend payments. As long as total sales continue to grow at least at the same pace, this will not pose a long-term problem, and in this case, that condition is being met. Debt management is something the company's leadership will need to pay more attention to going forward, because the company's debt has visibly increased due to COVID and the high interest rate environment. However, there is no major concern at this point, since the interest coverage ratio, despite trending downward, remains safely above the expected level of 2. To briefly summarize the points above, the company is available with a nearly 6% starting dividend yield, which was most recently increased by 3.4%. It holds a BBB plus credit rating, which is considered strong, and the dividend appears to be safe. Based on the fundamentals, the company may be slightly undervalued. It is most suitable for more conservative investors who are comfortable with slower but steady growth, with the added bonus of a high initial dividend yield.
Disclaimer. This video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video.
And now, we're diving into NNN REIT's latest investor presentation from November 2025. This company is one of the most stable net lease REITs in the US, and believe it or not, they've raised their dividend for 36 straight years. That's consistency you can really count on. So let's talk about what makes NNN tick and whether it still deserves a spot in your income portfolio. NNN just wrapped another steady quarter. Their core FFO per share grew 1.2% year over year to 85 cents, and AFFO per share was up 2.4% to 86 cents. Not huge leaps, but steady, reliable growth, exactly what keeps dividends safe in the long run. Annual base rent jumped 7.2% year over year, thanks to new acquisitions and strong occupancy. They closed $283 million in new investments this quarter, at a 7.3% cap rate, solid compared to the sector average. Year to date, they've invested $748 million, beating their guidance. At the same time, they sold 23 properties for $41.3 million. The interesting part? Some of these sold at a 5.9% cap rate, while new purchases are higher. That spread boosts long-term returns. They also raised $71.7 million in equity and issued $500 million in senior notes at 4.6%, giving them extra financial flexibility. And the dividend? 60 cents per share this quarter, up 3.4%, with a 70% AFFO payout ratio. Very sustainable. The strategy here is simple, and that's actually what makes it strong. NNN focuses on single-tenant net lease properties, meaning the tenants cover taxes, insurance, and maintenance. That keeps operating risks super low. Leases run 10 to 20 years, with the current portfolio averaging 10.1 years remaining. Only 3.2% of leases expire through 2026, giving them remarkable cash flow visibility. And the numbers speak for themselves. Occupancy has never dipped below 96.4% in the past 20 years. And they pick prime Main Street locations, keeping rents strong and sustainable. Their portfolio is massive, 3,697 properties, 39.2 million square feet across all 50 states, with over 400 tenants in more than 35 industries. Top tenants run an average of 1,731 stores each, giving NNN incredible resilience and low earnings volatility, even in recessions. NNN's acquisition approach is disciplined. They don't just look at current tenants. They buy based on the quality of the location and potential future tenants. Lower rents make it easier for tenants to succeed, which drives higher renewal rates and long-term occupancy stability. Since 2010, NNN has acquired over $10.4 billion in properties. 72% through relationship deals at an average 7.4% cap rate, and 28% through market or auction deals at 7.1%. That gap between purchase yield and cost of capital is what fuels long-term FFO growth. The portfolio is well diversified across regions. No single area dominates. Southeast, 25.4%, Midwest, 24.4%, South, 24.4%, Northeast, 13.8%, Rocky Mountain, 7.6%, West, 4.4%. The top states by property count are Texas, Florida, and Ohio. This kind of geographic spread reduces economic and regional risks. Financially, NNN is rock solid. Their capital structure is 62% equity and 38% debt, very conservative for a REIT. The $4.95 billion of debt carries a 4.2% average interest rate, with 10.7 years average maturity. No floating rate or secured debt. Interest coverage sits at 4.1 times, and the maturities are nicely laddered out to 2052. In a high-rate environment, that's a huge advantage. Let's talk dividends. 36 consecutive years of increases. Their current annual dividend is $2.40 per share, yielding 5.6% as of September 2025, with a 70% AFFO payout ratio. For anyone chasing reliable income, this REIT is built for you. Over the long haul, NNN consistently beats the REIT industry. 25-year annualized return of 12.3%, 20-year 9.6%, 15-year 8.7%. Sure, the S&P 500 has outperformed in the past decade, but for steady income compounding, NNN remains a top-tier performer. Strengths. What NNN does exceptionally well. Extremely stable income with long-term net leases. High occupancy over decades. Minimal lease expirations. Safe, growing dividend for 36 years. Conservative balance sheet with long-term fixed debt. Disciplined acquisitions at attractive cap rates. Massive diversification across states and industries. Potential risks: slow FFO growth, mid-single digits. Retail-focused tenant base, somewhat sensitive to downturns. Large absolute debt despite good management. Stock price volatility. 1-year return of minus 7.1% despite strong fundamentals. So the conclusion is, NNN REIT is the ultimate sleep-well-at-night dividend investment. It doesn't aim for explosive growth, but it delivers decades of consistency, stable cash flow, industry-leading occupancy, and one of the longest dividend growth streaks in the REIT world. If your goal is long-term income, stability, and low volatility, NNN is a strong candidate. If you want fast growth or tech-style returns, it may feel slow. But for dividend investors, this REIT is one of the most reliable income machines you'll find today.
Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.